Welcome to the Money Mastermind Show. Let's talk money.
And welcome to the Money Mastermind Show. So you went to school, you got your college degree, or you didn't, but you took some college courses, and you took out loans, and now you have to pay them back. But what happens if you can't pay back your student loans? Joining us tonight is Jay Fleischman of the podcast StudentLoanShow.com, and he's going to help us figure out that answer. Welcome to our show, Jay.
Thank you. Thanks for having me, Glenn, and thank you to everybody else for having me, too.
Thanks for taking the time out to help us answer these questions.
Sure.
And, of course, we have the members of the Money Mastermind Show. We have Kyle Prevost of YoungandThrifty.ca, Miranda Marquette of Planting Money Seeds, Peter Anderson of Bible Money Matters, and Tom Drake of the Canadian Finance Blog. I'm Glenn Craig of Free From Broke. So, paying back student loans, they can be difficult. But can you tell us, Jay, how people first get into that situation where they can't pay them back?
Well, the cost of higher education is enormous. It far outstrips most people's ability to actually pay it out of their pocket. You know, you've got schools, you've got in-state schools where it's costing you, inclusive of books and tuition and living expenses, nearly $30,000 a year. You take a 4-year education, that's $120,000, and not that many people have that amount of money just sitting around, either on their own or from their families. So that's a major reason. You've got this ballooning cost of higher education, and income just isn't keeping up anymore. And especially now, you've got people that are still recovering from the recession of 08, 09, 10, on. And for some people, those financial hardships continue even now. So their kids turn 18 or even 17, are looking at college, they've got no way to pay for it. So student loans to the rescue.
That's pretty, it's a tough situation, isn't it? I mean, what do you do if you don't have that college degree that's needed so badly then?
Yeah, well, that's exactly it. There's very little that you can do in the workforce without a college degree, or that's what most people think. My parents, and I'm 45 years old, so I'm a little bit out of that scene. But my parents, when I turned 18, when I turned 16 or 17, when it came time for the SATs, I was the first one to go to college. They said, you don't have a choice, you're going to college. A lot of my friends who have kids who are 16 and 17, they're saying the same thing to them now, because there's nothing out there for the high school grad that's going to be able to help them make their way in the world, at least not in a standard 9-to-5 corporate environment.
It's an interesting thing. Like, you have an option to buy a house or not spend hundreds of thousands of dollars. But the option's not really there as well in college.
Well, but you can get an education. There are ways to get an informal education. There are plenty of online courses that you can take to at least learn something. So really what you're buying isn't the education, you're buying the piece of paper, you're buying the diploma. And most people, when they go into college, they don't realize that there is a vast difference between one diploma and another, or a for-profit school's diploma and even a community college's diploma. They're not given the information that they need to be able to make an informed decision. You make an informed decision when you're buying a car, but you don't make an informed decision when you're going to school.
Yeah, and we talk about a lot of other decisions that might be like those big decisions in your life, like a house. But certainly college has got to be up there with its costs and its long-term effects on your life and career.
Well, I think he makes a good point, though, that you've got the private colleges you have to worry about. And the degree you get from a private college, not a private college, I mean a for-profit college. I should walk that back. He talks about the for-profit colleges, and the degrees you're getting from a for-profit college are going to be more expensive than what you would get at like a regular state school, but the degree is not going to be as looked on as legitimate. Does that make sense? So part of the problem you're running into, especially in terms of where you're looking at the for-profit colleges, is they think it's great because they can use student loan money and they can get these students to come with their student loan money, and these degrees are practically the next thing to useless.
Now, I don't want to disparage any school, but can we get some maybe examples of a for-profit college versus, I mean, because there's a lot of confusion there. Like there's state schools, but then there's private schools that aren't for profit, and then you have for-profit colleges.
Sure. So the poster child for for-profit schools is ITT Tech, because we see them on TV all the time. You've got DeVry University. You've got Phoenix University. University of Phoenix. I'm sorry. Argosy University. And the big one that hit the news this week and has really been in the news since the end of June of 2014 is Corinthian Colleges, which is the corporation, or rather was the corporation, that operated Everest as well as Wyotech as well as Heald. And that entire school group of that entire corporation shut down their campuses late this past Sunday. So anybody who was a student on Friday night when they went home after class, they woke up on Monday morning and they weren't students anymore, at least not students of the university. But those are the biggies when it comes to for-profit schools. Things like schools like Harvard, Yale, and Princeton. Those are the ones that you automatically think of as not for profit, which doesn't mean that they don't generate a profit, but rather they don't exist solely to make a profit. You've got thousands of private universities. You've got tens of thousands of state universities. You've got the State University of New York, which is where I went to school. Then you've got your community college, your 2-year schools. But those are all accredited by the state licensing agencies, and they're accredited by the federal government to get federal student loan money.
Now, I understand some of the benefit of going to like an ITT Tech or DeVry, because maybe they specialize in certain things that you wouldn't necessarily get a degree in another school. Are there any other reasons why somebody would want to go to these schools that maybe like a Corinthian, in that it seems like it's a troublesome thing to get yourself into?
Well, sure. Those schools are really going to be they're targeting people primarily who are already working. University of Phoenix has a huge target on that. People who are working full time, don't have time to go to school, don't have time to enroll, go full time. So those may be a target, if you want to call them that. But a lot of the people that say Corinthian was targeting were people who otherwise wouldn't be able to easily get into any of those other schools. People who didn't necessarily have high school degrees or even GEDs. People who didn't do so well on their SATs or maybe even didn't take an SAT. Those are the people that Corinthian and ITT Tech and schools like that are really looking to when they're advertising in the middle of the day on TV and on subways and bus stops.
Interesting.
In fact, a lot of the lawsuits, the attorney generals of a lot of states have banded together to sue, in this case, Corinthian. But Kamala Harris, who is the attorney general of the state of California, put a really fine point on it. And she said, look, Corinthian isn't just giving a poor education. They're not just lying, but they're out and out targeting the people who, by any stretch of the imagination, shouldn't even be in college. These are people who aren't qualified to even get that education by virtue of the fact that they don't have the educational underpinnings to get there. And that was a big problem.
Did anyone else see the John Oliver thing? I live up in Canada, so the whole for-profit college deal is, we have a very few, but it's not quite as big a deal as in the States. Did anyone else see? That was my introduction to this whole targeting phenomenon.
Oh yeah, well, yeah, and it's horrifying because the people who can afford it the least are the ones that are totally targeted. And they've got these student loans, and you can't discharge them through bankruptcy, so you're kind of stuck with them.
Yeah, and there's an argument, or rather a line of thinking, and I agree with it, that the rise of for-profit colleges really began as soon as the bankruptcy laws were changed in 2005. Prior to the changes in the bankruptcy code in October of 2005, private student loans were fully dischargeable under Chapter 7 or Chapter 13 of the bankruptcy code without any additional showing of what's termed undue hardship, which is the standard for discharge of federal student loans. That changed in October 2005. So suddenly, all of the private banking institutions that weren't really looking at this as a major source of income because they knew that there were risks inherent in it, suddenly there were no risks anymore, or at least the risks were so minimized as to be inconsequential. So that money flood opened up, and the money flood really, it opened a lot in 2005, and then the spigot opened even more in 2007, 2006, 7, and 8, when the mortgage market started to dry up and investors needed places to put their money. So instead of putting them into securitized trusts when mortgage-backed securities, they were putting them into securitized trusts in asset-backed securities, and the only assets that were backing them are these private student loans. In fact, every private student loan is securitized in exactly the same way that the mortgages were securitized in the lead up to 08, and we all know how that ended.
This is really scary stuff.
Yeah, yeah. And to think it's like so the banks are making money off people who maybe shouldn't be in college, and basically they're putting money into these organizations that will give them money so that they could pay it back at a higher rate for a degree that may not be worth what they think it is.
Yep, absolutely. It's an absolute scam on the people who could afford it least and are least able to pay it back.
Yeah, I mean, really, it is. It's the selling of a dream. So many of these colleges and universities and technical schools are selling a dream. And they're ready and willing to give you the loans and all the other financial help to make that happen. But the problem is, that cost has just been rising since 1983. I think the stat says that the college costs have risen at the pace of almost 5 times the rate of inflation. So the costs have been going through the roof, but then when people are graduating, their graduate salaries have been flat for much of the past decade. So the money to pay off those loans just isn't there.
Yeah, that's basically what the John Oliver segment, which is one of his 20-minute sort of what he's become known for now segments, was illustrating. Is several of these people graduate from these programs. He highlighted these nurses. I can't even remember the specific school, but he highlighted these nurses that had graduated without actually doing any practicum hours at all, had not been in a hospital at all. And these women graduated with even the certificate name was something out there. It was like related to nursing, but not. And it was really sad. They basically said they had nowhere to work. It was a sad story.
It almost sounds like. So I just have to say, it almost sounds like it's something that you sign up for at the back of a comic book. Like right next to your X-ray glasses, like
X-ray glasses in a degree.
Sign up for this,
take your degree in 3D.
Like being able to get you could become a reverend of your own church in the back of Rolling Stone or something like that. It's really unbelievable listening to this and realizing that it actually happens and that people are stuck paying back loans for the most part on this.
Well, and it's not just looking for a job. If you want to go on to a higher education, if you get your 4-year degree, my husband was talking about how when they were looking at people who were applying to the psychology program at one of the schools he was teaching at, and they were looking at the applicants, and if they had a degree from a 4-year degree from Stevens Henniger's or University of Phoenix or something like that, it just went straight to the reject pile. They didn't even look at it because, for their graduate program, they were just like, yeah, no, and wouldn't even look at it. So it's not just that either. It's if you were like, well, I can't get a job, so now I'm going to try and get like a master's degree or something. There are some schools, not every school, but there are some schools that won't even accept you when you have a degree from one of these other schools.
Wow. So, I mean, we've gotten a little off topic here, but I think that's important to talk about these types of loans in these schools. But so money's getting tight. You have a student loan. You're realizing that you can't pay it back. What's your first step, Jay?
Well, first you've got to figure out what kind of student loans you've got, because you've got federal student loans that come with a large number of protections, lots of different payment options, and then you've got private student loans, which in technical legal terms, and you may not know this term, but you're screwed. Is really what it is. I mean, you've got
school. Is that the Latin for it, or is that?
You're just
Screwus Maximus.
Yeah, Screwus Maximus, exactly. But there's really nothing that you can do, because a private student loan is a bank loan like any other loan. It's just like walking into the bank and getting, a credit card or a personal loan or a personal line of credit. The only time that a private student loan is different from a regular bank loan is when you walk into bankruptcy, and that's when you've got these dischargeability issues. So, and these private student loans also, they come with higher interest rates. Most of them are adjustable rates. They adjust on a monthly basis from day one. So it's not even like, your adjustable rate mortgage where you get a little bit of time at a fixed rate and then it adjusts only periodically. No, these private student loans, they adjust monthly. It's crazy. But the federal student loans come with, you've got consolidation. You've got income-based repayment. There's a new version of that as well as an older version of that, whereby you repay the loan at 15% of your disposable adjusted gross income on a monthly basis, and it adjusts up and down based upon your income. So I call it a financial lung. It expands and contracts every single year, or as your financial circumstances change. And then under the old income-based repayment, you get a discharge of the unpaid balance after 25 years. So even if it negatively amortizes, you get a discharge of the unpaid balance after 25 years. Under the new income-based repayment, which is kind of the same as pay as you earn, which you may have heard of, it's 10% of disposable income, and you get your discharge after 20 years. So those programs, if nothing else, those programs allow you to survive while you're paying your federal student loans. There's also public service loan forgiveness. There are other teacher forgiveness plans. There's military forgiveness. There's total and permanent disability. There's a host of things that you can get done. But to answer your question, so you're coming out of school, the federal student loans are coming due, the private student loans, you probably have 6 months to go with. The first thing you do, the very first thing you do, you get that 6-month window before you have to start repaying those federal student loans. You don't take it. You put yourself into repayment day one, immediately, and you elect income-based repayment on day one, or pay as you earn for the new loans. The reason you do that is, remember, income-based repayment or pay as you earn is it calculates your payments based upon your adjusted gross income. When you're first coming out of school, you've got no adjusted gross income, or very, very little. Maybe you work part-time during school, but you've got very, very little income to work with. So your IBR payment, or pay as you earn payment for the new loans, is going to be $0 a month. You can actually be in repayment at $0 a month. And better than that, you start the clock running on that discharge after 20 or 25 years, depending upon how old your loans are. So you shortcut it. By 6 months, you get yourself in, and then you don't recertify for another year. So you've got a year out of 20 at $0 a month repayment. That's enormous. And you can take whatever money you're making and you can throw that at the private student loans to the extent that it's going to cover it. So that's your first thing.
So that's an option when you start paying them back. That's an option that you sign up for, the income-based or the pay-as-you-go.
Yeah,
Right.
pay-as-you-earn,
You say, here I am, I'm done, I've got my degree or not. This is how I plan to pay it back for the term of the loan for as long as that is.
Yes. It's that simple. It is I do this for my clients, but I tell and the reason why I do it for my clients it's kind of the same reason why H&R Block will do your taxes. I don't have time, I don't want to screw it up, I don't want to get it wrong, but there's no reason to hire anybody, me included, no reason to hire anybody to do it. It's a 2-page form, it's downloadable off the web. I think actually that the version that's downloadable off the web, it's even a fill-in PDF. So you don't even have to print it and handwrite it and then retype it in. You can fill it in on your computer and print it out and sign it and just send it to the loan servicer. You don't need anybody for it at all.
It almost sounds like this is so good that why isn't it just the automatic thing to do? Like why aren't all the loans just like that?
Well, they should be like that, but when IBR first came in, there was ICR, there was income contingent repayment prior to 2007. When IBR came in, just a few years ago actually, nobody knew about it. Servicers didn't want to tell you about it because servicers make their money based upon the amount of money that they collect. So if you've got a $450 federal student loan nut that you've got to crack every single month and you're paying it, servicer's going to get a portion of that money. If under IBR you would be in a $10 a month payment plan, servicers suddenly taking a bath. They don't have that financial incentive, and it's only very recently, and it's one of the reasons why I started focusing my practice on student loan work. It's only recently that they're putting the information out there and that it's available. Unfortunately, now we've got a lot of companies that are out there that are offering to do your IBR or your consolidation for, $1,500. And, like I said, it's a 2-page form. You don't need anybody to do it for you.
Yeah, well, yeah. I mean, when we consolidated my husband's student loans when he finished his PhD, it was really easy. And it changed the whole way you can pay it back. When you set up these student loans, they're set up individually. So each semester or each year, it's a new loan. So you have several loans and you have to pay them back in different chunks. And when you first looked at it before we consolidated all of his student loans, we were looking at, payments of like $600-700 a month when you add them all up. And because they automatically set for you to pay it off in 10 years. And you're just looking at it going, oh my gosh. But then we went and we consolidated. Now it's much less. Of course, it'll take us 25 years, but it's a lower interest rate and it's manageable and the payment's manageable. We don't qualify for income-based anything. But it was, it was just looking at that and realizing that you can consolidate them and make it manageable is another thing that I think a lot of people overlook. And they're looking at it and they've got 3-4 things coming in each month saying you need to pay this much for this loan and this much for this loan. And it starts to get overwhelming because you've got 3 or 4 different payments you have to make each month and it adds up and it's just hard to keep track of.
Yeah. It's crazy. So many people will come to me just because they're dealing with 2 or 3 different servicers. They're getting bills left and right and they have no way to organize their payments. And for those people, that's when consolidation makes sense, even before the IBR. Get it all under one roof. Just make your life a lot more sane.
Right,
now,
and the form is so easy now that if you're consolidating your federal loans at the same time, like Jay was saying, the form is right there, and as you're consolidating them, you can check it to say that you want them to do the income-based repayment. So you can consolidate and set up the income-based repayment all at the same time.
Now, are there different types of consolidation?
No, federal loan consolidation only goes through the U.S. Department of Education, goes through the direct loan program. There's one form, one way to do it, one process. Takes somewhere between 60 and 90 days. Sometimes you'll get it done sooner. Sometimes it'll take closer to the 90. But it's simple. It's fast. It's the consolidation form is 3 pages. IBR is another 2 pages. You're looking at 5 pieces of paper to save yourself a lot of money potentially. And once you're in IBR, and like I said, your payments can go up and down, but they're capped at the 10-year standard payment amount. So that's one of the things that a lot of my clients who are, say, residents, they're doctors and they're residents and they make peanuts. They'll come to me and they'll say, well, my payments are so low now because my income's so low, but in 5 years when I get out of residency, I'm going to be making a lot more money. I'm not going to qualify for IBR. The answer is no. You remain in the program. So long as you've got the hardship to get in, you stay in, but your payments are capped at the 10-year amount. So if your 15% or 10% is above that level 10-year repayment amount, you're not going up that high. You're still capped there.
So do you have to prove some sort of hardship in the first place?
Yeah, not hardship in a standard sense. It's 10%, and I'll go 10% because I'm presuming that it's a new student, a new grad. All you have to show is proof of your income and show that 10% of your disposable adjusted gross income, I'll explain what that is in a second, that 10% of your disposable AGI is less than the 10-year standard repayment amount, even by $1. That's all you need to do. So it's a hardship in that respect, but there's no, you don't have to get a court determination that there's a hardship, anything like that. And by the way, disposable adjusted gross income, what you do is you look at, the easiest way to do it is you look at the bottom line of the front page of your tax return that shows your adjusted gross income, and you minus 150% of the poverty level for a family of your size. Now, before you start calculating, if you're married and you file taxes together, it goes household adjusted gross income. But if you're married and you file separately, it looks at your adjusted gross income only, not your spouse's. So you could be making $15,000 a year. Your spouse can be making $150,000 a year. They only look at your income, but they still look at the total family size. In bankruptcy world, we called it heads on beds. They look at the number of kids in the house. They look at whether there's a spouse. If you've got an elderly, parent or grandparent, aunt, uncle, relative that's living there, you count all those people. So you get the benefit of the full household, and you get the benefit of solely your income if you're filing separately.
So that's a real a real incentive to speak with your CPA or your tax professional and see whether filing separately really makes out for you in that case.
Yeah, absolutely.
Now you said you're using your return, so is that what determines the income level on repaying these loans? Like your past return? Because I'm imagining like you're getting out of college, you haven't maybe had a real job for the most part for the last 4 years, and now you're going to have one. So your last return is going to be pretty low for the most part. I mean, It's not always going to be the case, but I mean that's probably going to be more often than not.
Absolutely. Make that IBR application, before the cap hits the ground when you throw it up in the air. Make that IBR application that day because you've got very little income. If you filed a return, it's got very little adjusted gross income. There are ways of providing alternative proofs of income. Most recent pay stub is always a good one. So let's say you made below the income threshold. You didn't file a return last year. You're working a job, delivering pizzas, to use the Dave Ramsey idea. You're making $10 an hour. You can show the servicer that $10 an hour pay stub minus all the taxes, and that's what they can use to go off of.
Wow, and that's good for the next year until your next return.
Yep. Well, it's good for 12 months. You recertify every 12 months.
So if in between there and then you get an engineering job and you're making 6 figures, you're still at that $10 an hour repayment rate.
Yep, absolutely. And you take that money and you send it to the private student loan company
Mm-hmm.
because those people they're relentless and unforgiving. So knock down that number while you have the ability to do so.
That does sound pretty sweet.
There's almost enough to say that people should almost be taking a class or something along those lines when they're signing up for these loans. There's so much to understand and realize, and I almost wonder if part of the problem is that so many of these kids that are going to school don't understand what they're getting into. They don't understand the difference between a private and a federal student loan. They don't understand that they maybe should be applying for that income-based repayment right away. A lot of different factors. And, the Project on Student Debt says that 15% of borrowers are defaulting on their loans within 3 years of entering repayment.
Well, wait a minute, though. I don't know if you saw the Moody's report that came out when they downgraded a whole bunch of federal student loans a couple of weeks ago. They figured the numbers based on reality. It's 15% are in default overall, but if you take out the loans that are not in repayment, you're at a third of all student loans that should be in repayment now are in default.
Wow. That's crazy.
That's insane.
Yeah.
So do you think that's part of the problem, that people just don't understand what they're getting into when they sign up for these huge loans?
Well,
yeah. Go ahead.
I was just going to say, well, here's the thing is you're supposed to go through education. I remember sitting through student loan education. I don't remember anything they told me, and I signed a bunch of papers, saying that I'd been through it, but I don't know how comprehensive the education is.
I've done this recently. There are a bunch of website pages that you have to go through and say that you understand it. But, it reads almost as dry as the term of service to a degree. And you're sitting there waiting to go to school and you need this money. So you're hitting next. There's no quiz on it. You don't have to pass it. They're just like, you do understand you have to pay this back, right? Okay, check. So there's no comprehensive, showing that you definitely understand what the different options are. And I don't know that there's anything, from what I recall, in the whole not the income-based options, saying that would be where you go from there. I don't know what type of education there is. That's what I'm wondering. We said you just mentioned how there are all these loans that should be in repayment. Is there enough education when you're paying back the loans as to what to do? It sounds like maybe if they had these options readily available to them, it would probably keep a lot of more people in the system paying loans.
Yeah, well, and actually, you make a good point though, because when I was going to school, obviously these options didn't exist. There wasn't this income-based repayment program and everything like that. But that's a very good point. They talk about, do you understand what you're doing? Do you understand that you have to pay this back? And you sign all these papers. But I think you're right. They don't really offer you this information about, here's the best way to pay it back, and here's how you can afford to pay it back. They don't really go into those sorts of options.
They kind of say, how much do you think you'll make? And then you can kind of figure out on these charts, what you would be paying, and you give it the lip service that you need to get to the next page. But, you sign it, but it doesn't necessarily mean you understand it. It's not like anybody can't just flip through the pages and just put figures in and just get to the end.
Well, but you're 18 years old.
For the moment, yeah. I'm not. It's been a long time since that. But yeah, for the average kid coming out of high school, I'm going to get a job, I'll pay back. Yeah, sure, I understand.
Your frontal lobe isn't developed at 18.
And
you're still missing some of your brain parts.
When I signed up for Columbia House, I understood I'd get a CD a month and I paid for it.
Oh, wow.
I understood it.
That really was a while ago, Glenn.
Yeah.
See, that's the problem, too.
It wasn't the album club, at least.
You've been sold this dream by the colleges that, hey, you're going to be getting a great job after you graduate. You're going to be making a ton of money, so you're not going to have any problem paying these loans back. When in reality, a lot of people are going to be underemployed when they're graduating. Jobs just aren't there like they used to be. You're not going to be employed a week after you graduate. So
are we close to a 2008 mortgage turning point, Jay? Okay, Moody's has started to downgrade. The 1/3 statistic, that blows me away. When I started to jot down some numbers on that is really worrisome, especially if they're securitized I'm not familiar with the way they are, but I'm familiar with the way the mortgages were.
Mm-hmm.
That's really worrisome. Like, are we going to start seeing some actual news reports and some actual public awareness of this, or are we not close to the bottom yet?
God, I hope we are going to start seeing some more news reports, and I hope that there are going to be some changes. I think that the federal student loans, they're kind of doing the right thing, and all of the people who say that we should allow student loans to be dischargeable in bankruptcy, I agree with that. And I think that there are some situations where it makes more sense to do that, and but the federal student loans with IBR and pay as you earn, I think they're doing as best as they can. I really do. You're getting your payments lowered. They're adjusted to your income. It's a long enough period of time. Whether it negatively amortizes or not, it's discharged at the end of the 20 or 25 years. Yeah, you get a 1099, but my personal hope is that aspect of the regulations will change, and that they won't issue 1099s, and it won't be taxable. But the feds are in pretty good shape. The private loans are really where the problem is, because all of these loans, they're all bundled, they're all securitized, they've got these massive guarantee assignments. I mean, to read these agreements it's ridiculous. I mean, I've been doing this for a long enough time, and I was doing some mortgage work in my firm before that, so I kind of have the pattern of it. But even with me, it's such a headache. And the private student loans are up to the loans from 2008 were primarily guaranteed by a company called Terry. Yeah.
I had a private Terry loan.
Well, there you go. And
back in the day.
Back in the day. And then Terry went into Chapter 11 in 2008. For all intents and purposes, stopped doing business because they couldn't keep up with the number of default claims. So are we headed towards something? I think yes, and maybe that'll finally spur legislators to take some action, and at the very least, maybe it'll move people to the polls next time.
This sounds like the next Michael Lewis book. Like, I feel like someone out there is shorting these things right now. Like, that's really eye-opening stuff.
People are definitely making money off of it. That's for sure.
Oh, sure.
Yeah.
So, for the student that maybe is out there getting ready, or the parents that are listening, with their kids getting ready to go off to college, why private loans at all?
No private loans at all. No,
Wow.
There is never a good idea to take a private student loan. Sorry.
No, I know.
Seems so benign, though.
Well, here's the thing.
So nice. They're on every bank page. They're all over the place.
So the reason you need the reason you need private student loans, the reason why I ended up with a private student loan is because I went to an expensive school for my graduate degree. And of course, even though I had a scholarship, it didn't pay for my full tuition. So I had a scholarship to this expensive school, and it didn't pay my full tuition, and it was an expensive school. And the graduate loan available from the federal government did not cover. I mean, the limit that you can get for a graduate school from federal loans is surprisingly low. And so the scholarship wasn't enough, the federal loans weren't enough, and we were looking at it, and between, the living, the books, all that kind of stuff, yeah, that's why we ended up turning to the private loan. It wasn't a lot, and it was not a problem, and, when I got it, the interest rates weren't that bad, and it's not a problem now, but not everybody's so lucky as I am. I did it for less than $10,000, right?
Well, and that's the whole thing. Yeah, but less than 10,000, look, that's when it makes sense. And it was a graduate degree, and presumably you'd done your homework, you knew what you were going to get out of it. Or maybe not. But
whatever. It's worked out for me. It's not worked out. It has. It's worked out. I wouldn't be doing what I'm doing today, sitting with all you fine people without this degree. So it's great.
Well, then then you dodged the bullet, which is great. But for people who are going into undergrad, people who are looking at, the Culinary Institute, which is, oh my goodness, these poor kids are being sold on the notion that they're going to be the next Daniel Boulud, and they come out and they're asking me if I want a grande or a venti, and that's if they're lucky. Really lucky. These poor kids, they're being led like lambs to a slaughter. Look, if you're 16, 17 years old, first of all, you want to make sure that you graduate high school or you get a GED. You do that first because it's at least going to give you the baseline to get someplace. And the next thing you do is you look at a community college. It's 2 years. It's a lot less expensive, and it's going to give you the option of matriculating if you get out in 2 years and you get a degree. Look, it's your trial to see if higher education is right for you. It gives you a chance to buckle down. It gives you a chance to do the right things. Then you go to a private 4-year college, and hopefully you can qualify for more federal student loan money if you haven't busted all of it out, and in 2 years you probably haven't. Look at scholarships. There are thousands of scholarships out there that nobody takes advantage of. Look at scholarships. Work part-time. If it takes you longer than 4 years to complete your degree because you have to go back to work, well, it takes you longer than 4 years. Go out, get a part-time job, take a little bit longer. Reduce the amount of debt that you have coming out, and you're not going to feel quite so bad. You'll still feel bad, but not quite so bad if you come out of school and it's not all sunshine and roses.
Now let me ask you about that. So, from what I recall of the federal loans, you do have a time limit to either go back or start repaying it.
Mm-hmm.
So you don't really have that much time to just say, I'm going to stop school for a while and work and then maybe go back. I think there's limitations on that federal loan.
Well, wait a minute though. You're thinking about the limitation until you go back into repayment. Because when you leave school, you get the 6 months until you have to start making new payments. You can do your freshman and sophomore year of undergraduate work this year and next year, and go on a world tour for 10 years. Take up with a band and take a world tour. Come back in 10 years and do your junior and senior year. That's okay. So long, the only limitations on getting a new federal student loan is that you are not currently in default on an existing federal student loan, and there's money left in the pot for you.
Yeah, but I think what he's talking about is when you leave for that 10 years, after 6 months, you got to start repaying your loan if you're not in school.
Mm-hmm.
So
pay as you earn, IBR.
Right. So I think that's so what you're saying is if you're going to take a break from school, you still immediately get into that program, the income-based program, and you just immediately get into that, because then once you start up school again, you can go ahead and go back to suspending those payments.
Exactly.
Okay. Yeah, that was what I was talking about. It's not like you could just not pay your loans until you go back to school. After that 6 months, you're paying something, no matter how you say it. So this income-based option, I'm sold. But what are the other options that are out there that people are taking? If it's not doing that,
for the federal student loans, IBR is really the way to go. You've got your standard repayment, your 10-year standard repayment. You've got your extended repayment that'll take you over 20 years. You've got an extended graduated repayment where the payment is low for 2 years and it steps up every 2 years until the end of the term. And then you've really got your IBR and your pay as you earn. There's ICR still, income contingent, which is far more complicated. It's based upon your loan balance and your income and the number of, it's this crazy calculation. But it's useful in very small, limited situations, primarily when there's a parent plus loan, when the parent has taken out an undergraduate plus loan for their child. But that's used so infrequently. But really, IBR is the way to go. It's quick and easy and reduces your payments as much as possible. Easy to administer, easy to take advantage of. And if you're setting yourself up for public service loan forgiveness, which is where you work for the federal, state, municipal government, or a 501c3 not-for-profit corporation full-time, you make 120 on-time monthly payments while you are so employed full-time. At the end of that 120 monthly payments, the unpaid balance on your federal student loans is forgiven, which means no 1099, and it's only 10 years. You can use your IBR payments will count towards that 120 months, but the extended and the extended graduated payments will not go towards the 120 months. So one more reason for IBR and one more reason for public service.
That's what I was going to ask. If you get the IBR, can you combine it with other things?
Yep.
So that's a pretty sweet option then. And can you tell us a little bit about, let's say, deferments or forbearance?
I love that. It's like, why do you need that when you've got the income-based repayment, right?
Well, exactly, because
let's go back to the IBR. So,
but if you're stuck with private loans, or if you find yourself needing it, I mean,
let me go into a situation. So when you start repaying your loans, can you reclassify it as an IBR?
Yeah, sure. You can elect IBR at any time.
So like I've been paying you for 3-4 years, I could still say, you know what, I want to go into. Okay.
Yeah, sure, flip into it. In fact, if you're in default and you rehabilitate your student loan, and you consolidate, and you're, rather than going the nine monthly payments and you rehab at the end of it to bring yourself current, if you consolidate out of default, the federal direct loan program will require that you elect a payment option at that point, and you can elect IBR right then if you're consolidating your way out of default. Get yourself right into IBR. But you can, anytime, you could be 8 years into repayment and say, you know what, I'm going IBR. I lost, and the reason why I side with the forbearance option is what most people do is they lose their job, they call Sallie Mae or Navient or Fed Loan Servicing or whoever it is, and they say, hey, I lost my job. And the very helpful servicing agent on the other side says, well, that's no problem. We'll just put you into forbearance. No, what you want to do is that's the day you want to go into IBR if you're not already in it. I lost my job. I want to go into IBR. Oh, well, you qualify for $0 monthly payments and you stay in repayment. You're still considered in repayment on your loans. So it goes to that 20 or 25-year discharge period. Don't burn your forbearances.
And no matter how much you're paying, that doesn't affect your credit score at all.
Nope, absolutely not. You are reported as paying on time monthly,
as opposed to actually paying zero if you can't pay it and you're not using an IBR option.
Right. Because then you're reported as in forbearance or deferment.
Wow.
There's a lot to know.
It just sounds like you have the option of doing something that sounds reasonable that you can take care of and actually get rid of after a certain amount of time, or you could do something that can cause a whole lot of problems down the line. And you could always flip over, but you probably don't know well enough to do it.
Yep, absolutely. And it's so easy to do, but when you've just lost your job or you can't make the monthly payment, and you call your Sallie Mae folks, they're talking a mile a minute. They're not giving you full and complete information. They're using terms that you don't understand, and you're freaked out because you're not going to be able to pay the rent or the mortgage in 2 weeks when it comes due. Mm-hmm. So they say, don't worry, forbearance, you'll call us back when you get a job, and boom, you're taking it. That's what you do. You operate out of fear. It's a knee-jerk response.
Yeah. Mind blown. Let's throw in a different situation.
Sure.
So, maybe your folks co-sign a loan with you. Do you come up with situations where, like, one of the two parties, like, what happens if your parents can't pay the loan? And maybe now that becomes a difficulty for you. That's got to be a can of worms in its own.
Well, it makes Christmas dinner really uncomfortable, but
They're just trying to tell you something. Don't bother. I'm sure it happens.
Yeah.
Especially with economy and whatnot, where a parent says, "Of course I'll pay for school. Of course I want to do the right thing," and then all of a sudden, maybe the mortgage goes up, the taxes go up, and all of a sudden, this is sitting there going, "Wow, I can't do it."
Yeah. Oh, absolutely. Co-signed student loans exist solely in the world of private loans.
Okay.
There's no co-signing for Fed loans. The only federal student loan where the parent's name is on the signature line is a Parent Plus loan, where the parent takes the money out for the student. The student's got absolutely no contractual responsibility at all. And anything else is going to be a private loan. And that's primarily because they're ostensibly credit-based. They're not really credit-based, but in theory they are. So the parent will co-sign for the student. The student will take out ridiculous amounts of money. Student will graduate, not have any money coming in. Student can't make the payments. Now suddenly the parent's on the hook. And I get a lot of phone calls from parents. More than students actually, for private student loan issues. And they'll always the parent will call me the day that they get served with the summons and complaint and a lawsuit.
And then why? It's just treated as a private loan that the parents have to pay back?
Yep. And it goes through the court system. But what I tell my clients is the best thing that could ever happen to you with respect to a private student loan is to get sued. It is the absolute best thing in the world, because up until the time that you're sued, everything is voluntary. You're voluntarily making payments or not. They're voluntarily giving you information or not. They're voluntarily providing an accounting, balance due, payment history. Once you're in court, you get to hold their feet to the fire and put them through a discovery process. And as far as settlement is concerned, you're dealing with lawyers who are a lot closer to the decision makers, as opposed to a debt collector that's working for an outside debt collection agency, not really very close to the decision makers, don't really have that much authority.
Interesting.
Yeah. So lots of options out there.
Jay, this has been a really great episode. I know for myself, and having a teen in the house and loans of my own, this is very helpful. Cool. This is definitely one that's going to be, earmarked for later. So like what we try to do here is at the end of the episode, we like to have a final word where we just kind of sum up our feelings, and we'll go around. And Tom, if you'll give our final word on what you can't do.
Yeah, I had nothing to contribute to this talk, and there's a good reason for it. Here in Canada, it's like a totally different world from what you guys are talking about. We've talked in the past about how our education is just cheaper to begin with, but these private loans sound pretty scary. Like as a student that hopped on the student credit card and everything like that and had no concept of debt, it seems like they're almost preying on like the people that understand that kind of concept the least. So that's the biggest thing I took away from this.
Yeah, I mean, I'm sure we could do a whole other episode on ways we could just fix the system in general, or should the government just pay for it? And then, but that's for another day.
Just look to Canada.
You've mentioned that like several times, Glenn. I think we'll slot that in. We'll do an entire episode on should the government pay for everybody's.
Maybe I just want whatever I have paid off. Peter, what's your final word?
Well, my final word is just to make sure if you're about to go to school, make sure you're looking into all this stuff before you sign on the dotted line for all sorts of crazy private loans and co-signing with your parents and all these crazy options. Make sure you're looking into them and realizing what options are out there for income-based repayment, pay as you earn, and all those things that Jay has been talking about today. And just make sure you know what you're going to school for. Don't just go to school for fun and get all these thousands and thousands of dollars in loans. just to go and drink and party with your friends. Make sure you're going for a good reason. You have a plan for your future and what your degree is going to be. So there you go.
And Miranda, what's your final word?
Yeah, just kind of more of the same. Make sure you understand what's going on. Don't take out more student loans than you need to, and really stop and think about where you're going to school and how expensive it is and ways you can kind of walk that back. I know my husband started out at a community college, and he got a scholarship to the community college, and even though he may not have gotten a scholarship to a 4-year school to begin with, the fact that he could get a partial scholarship to the community college, then get his grades up at the community college, meant that later he was able to transfer all those credits and get a scholarship to the 4-year school to finish up. So it really is a good starting point. And so consider that. A lot of people don't consider that, but it is a good consideration because you can save money and possibly boost your academics to the point where you can get a scholarship later.
And Kyle, what's your final word?
My final word is that I did not know the words "We stand on guard for the international anthem" referred to private student loan companies. Apparently they do. I feel very protected and cocooned. Other than that, I'd just like to say, please push, whether you're in Canada or the USA, for a personal finance course in your local high school so that some of this stuff can be taught once in a while.
Yeah, it definitely needs to be brought to students' attention, even while they're in college, and as they're getting ready to repay this stuff. So, Jay, what is your final word on what to do if you can't repay your student loans?
Start from the beginning of the episode and play the whole thing all over again.
Good answer.
That's a way to sum it up. Jay, where can people learn more about what you do?
People can find my podcast at studentloanshow.com. My law firm website is at consumerhelpcentral.com. Drop me a line if you have any questions. I'm happy to answer any of them.
Thank you again, Jay, for joining us, and thank you everybody out there for watching and listening to the Money Mastermind Show. Until next week, be good with your money.
Thanks for joining us on the Money Mastermind Show. Get more information at moneymastermindshow.com. Don't forget to subscribe to the show on iTunes and YouTube and follow us on Google+.